By 2026, Nigeria is rolling out its biggest tax shakeup in a generation. So what does this actually mean for your business, for your paycheck? Well, that's what we're here to do. Let's break it all down.
Okay, so you've probably heard the talk, right? Seen the posts online, and there's a lot of confusion, a lot of chatter, and a lot of worry. The big one that keeps popping up is this idea that the government is just going to start pulling taxes straight from your bank account. We're going to get to the bottom of that for sure.
So with all that noise out there, what is actually changing? Let's cut through all the speculation and get right to the facts.
All right, let's zoom out for a second and look at the big picture. This isn't just a small tweak. We're talking about the biggest overhaul to Nigeria's tax system since 1999. The whole idea is to take over a dozen old, kinda confusing laws and mash them all together into one single unified system. Why? Well, the goal is pretty simple. Make taxes easier to manage and, get more people to actually comply.
Okay, so when is all this happening? It's not all at once. The new bills were signed into law back in June 2025. Then, the first big change for most of us hits in January 2026. That's when the new personal income tax rates kick in. And then, by October 2026, the whole thing goes digital. So yeah, those are the key dates you're going to want to circle on your calendar.
All right, let's dive into the specifics. First up, what's changing for companies? And you know what? There are some pretty big shifts here for businesses of all sizes, but let's start with some really good news, especially for small and medium-sized businesses.
Okay, check this out. For small businesses, this is a huge deal. Before, you didn't pay tax on your turnover until you hit 25 million naira. Well, they just quadrupled that. The new tax-free threshold is 100 million naira, 100 million, and that's not all. You know that 20% tax bracket for companies in the middle? Gone, just completely wiped out. This is a massive tax break, and it's clearly designed to help SMEs grow.
Now, for the bigger players, the large companies, there's something new called the development levy. It's a 4% charge on their profits. But, and this is the key thing to understand, this isn't just another tax piled on top, it's actually a replacement. It takes 4 older levies, things like the tertiary education tax and the IT levy, and rolls them all into one single, much simpler payment. And one last big change for companies. The capital gains tax rate is jumping up to 30%. Now, why are they doing that? It's all about consistency. This brings it to the exact same level as the corporate income tax rate. So, it doesn't matter if a company makes a profit from its day-to-day business or from selling off an asset. It's all going to be taxed at the same rate.
Okay, we've talked about businesses. Now let's pivot to what this means for employees, for you. This is probably the question that's on everybody's mind, right? How is this going to affect my payslip? What does this mean for my actual take-home pay?
So here are the new tax brackets for individuals. The big story here is that the system is way more progressive. Look at the bottom. If you're earning up to 800,000 naira a year, you pay 0 tax. Nothing. That is a huge relief for low-income earners. From there, the rates slowly climb as your income goes up, all the way to 25% for folks earning over 50 million naira.
And this next part, this is absolutely crucial. The very definition of what counts as income is getting a lot broader. We're not just talking about your basic cash salary anymore. Now we're talking about bonuses, rent allowances, if your company provides you a place to live, car benefits, even things like digital rewards. All of that is now on the table as taxable income.
Okay, so this brings us right back to that big rumor we talked about at the beginning. Let's just bust this myth right now. The government is not going to start dipping into your personal bank account to deduct taxes. Let me say that again. They are not doing that. Your employer is still the one who will handle your salary taxes through the PAE system, pay as you earn, just like they've always done. The real change here isn't how the money's collected, it's how strictly the rules are going to be enforced.
And that word, enforcement, that brings us to maybe the single biggest theme of this entire reform, the massive shift to digital. And listen, this is way more than just filling out some forms online. We're talking about a whole new era of tech-driven tax compliance.
The whole philosophy behind this digital push can be summed up with this one simple idea. If money moves, taxes follow. See, this isn't really about making things convenient. It's a direct attack on Nigeria's low tax-to-GDP ratio. The new digital system is built to track transactions way more effectively than ever before. It's designed to close that huge gap in compliance and basically leave a lot fewer places for undeclared income to hide.
So how is this actually going to work? Think of it as a 3-step play. Step 1, paper is out. The era of paper filings is over. Everything major is moving online. Step 2,
The new Nigeria Revenue Service, or NRS, is going to have much better access to data, banking data, payroll data, transaction data, to spot when things don't add up. And step 3, the penalties for filing late or getting it wrong, they're going up a lot, especially for things like unremitted employee taxes. So yeah, the system is getting smarter and it's getting a whole lot stricter.
Okay, wow. That is a lot to take in, I know. So the big question is, what can you actually do to get ready for all this? Let's talk about some real actionable steps you can take right now, whether you're a business owner or an employee.
All right, if you're an HR or you're a business owner, listen up. The time to start preparing is like yesterday. You need to be looking at your payroll systems now to make sure they can handle the new rules. You've got to reevaluate all your employee benefits because a lot of them might be taxable now. And maybe most important of all, educate your staff. You do not want a ton of confusion come January 2026. A good idea might be to coordinate with your finance department or even create a little internal task force just to manage this transition.
And for all you employees out there, the key is to be proactive, not panicked. Start asking your HR and finance departments questions now, get ahead of it. Get into the habit of keeping good records of your benefits, rent payments, any receipts. And if you have any side hustles, especially freelance or digital income, be really aware of the taxes on that. Seriously, the goal here isn't to trick you or catch you out. It's all about making sure reporting is accurate. So stay informed, don't be afraid.
Look, at the end of the day, this is a massive, massive undertaking. We're talking about consolidating dozens of laws and dragging an entire nation's tax system into the digital age. It's huge. And it really leaves us with one big, thought-provoking question to chew on. Could this be the change that truly transforms Nigeria's economy?